Uh, Lastly, at the end of this panel, we have our closing address. We are very, very privileged to have with us today Mr. Mel Carvill. He's the non-executive director of PPF Group. He's our very own guru when it comes to international best practices in banking and finance. He's going to address us today on future of digital lending in India with a perspective from the global markets and international financial technology angle. Mel, thank you so much for being patient with us. Thank you so much for joining us, and the floor is yours. Over to you.
It's my pleasure. Thank you very much. So I'm going to start, I think, by re-looking at the context and by jumping back in time to begin with. In 1937, H.G. Wells, who I'm sure everybody knows was the author of the Time Machine, predicted the World Wide Web as a kind of permanent world encyclopedia, concentrated in a single place, accessible to every individual, whether they were in Peru or Africa, he said, and translatable into their own language. And I'm sure when he said that around 84 years ago, people would have thought he was crazy. But today, I think none of us would argue that the future is technology, and it's everywhere. And of course, it's very important in our international banking and finance industry. And I also think very few would disagree that a lending revolution is underway. The way that institutions lend is influenced by, I think, a number of disruptive forces. For example, increased access to customers through deepening smartphone and internet usage, mass of digital data that's now available from multiple sources. And I think also very much shaped by fast evolving customer expectations, which has been driven by their exposure to e-commerce and consumer internet experience standards. And of course, all complemented by rapid advances in data computing and advanced analytics techniques. Now, from the perspective of somebody outside of India, I think when it comes to digital lending, the world is looking towards India, where digital transactions, I think, have almost tripled. India's market for digital lending is poised to grow from about $110 billion in 2019 to $350 billion in 2023. And this is going to increase the share of digital lending in India's overall market from about 23% in 2018 to 48% in 2023. And that makes digital lending a sector with the highest penetration of digital channels in the country. So in summary, the global experience of digital lending and the growth of digital infrastructure in India, and I think also the readiness of the Indian consumer, is surely going to lead to further exponential growth in this digital lending sphere. Whilst we've talked a lot there about the numbers pointing at increasing demand, I think growth is also supported by government policy in the form of great emphasis on digital as well as financial inclusion. I think at one end of the spectrum, we have the Jan Dhan Yojana and Digital India. And at the other end, we have sandbox programs by regulators like the RBI and the SEBI for fintechs. With India's population and diversity, I think it would otherwise be very hard to roll out structures that work throughout the country. But the big advantage of doing things digitally is that it solves these issues to a large extent. Not only does it eliminate the need for multiple brick and mortar structures, but it also gives more options more quickly. Today, if someone doesn't understand, for example, English, they can be banked quite simply in their own language. And we've experienced the same thing in many other countries like Indonesia, China, and many European countries where we operate. And this has taught us a very valuable lesson, that in international finance and business generally, to be global, you don't just need to provide services to international standards, but you need to think local in terms of the consumer's needs. in our experience, digital lending maintains many of the principles of traditional lending. For example, lenders need to tackle traditional risk management challenges, such as document and signature fraud, likelihood of default, even as they combat many new challenges, such as identity fraud, data hacks, denial of service attacks, and so on. All of these are necessary to maintain the trust of customers and also regulators, and to prevent losses. Furthermore, I think it's also fair to say that today risk management needs to be always on, and lenders need to adopt the kind of mindset of continuous underwriting rather than one-time underwriting at the time of loan application or renewal. Turning now to public policy, I think it's very important to monitor business structures and models. It's important to distinguish those who are in it for the short term and those who are here for the long term. Models that bring easy access to credit but at unreasonable costs should be discouraged. And those businesses who are regulated and trying to innovate within the perimeters of the law and of regulation should be promoted and encouraged to innovate further. At the same time, it's very important to identify legitimate fintech players and create policy, business, and other motivations for them to grow, because borrowers are always better off with regulated lenders. Regulation is the cornerstone of digital lending because technology is habit creating. It provides ease of access for financially educated users who are savvy. But in countries like India, it's probably the first exposure and maybe the primary form of access for credit for many. And I think if this opportunity is to be used well, it can lead to financial literacy of an entire generation of the working population. But in the worst case scenario, however, as we've seen in other jurisdictions, bad digital lending will ruin the financial habits of a generation. And those short-term digital lenders who perpetrated this will disappear. They'll pop up in another jurisdiction in the world. And this is a very significant danger that we have to avoid and India has to avoid. When markets change so dynamically as they have been doing in recent years, it's always a challenge for both banks as well as policymakers to keep up with the trends and maintain momentum. But we see the Reserve Bank of India acknowledging this sudden shift since they've just appointed a Regulatory Review Authority 2.0 to generate dialogue for overall policy changes in the banking and finance industry. The Government of India has also provided an appropriate push to changing technology by rolling out various innovative stacks for full KYC of customers, such as CKYC, Aadhaar, XML-based authentication, particularly this for NBFCs in VICIP journeys, which are mandatory to ensure compliance. It is important for India to take strong and quick measures to create a sustainable market around its consumer data, while at the same time strictly enforcing data privacy. And I think more work is required in the areas of data anonymization and sharing. For instance, in the European Union, where I come from, mass KYC is very common. Every financial services user has a unique code, which is the only information the person needs to provide to avail of financial services. And this serves the dual purpose of protection as well as ease of use. India is, of course, also presently in the process designing and testing its own central bank digital currency, CBDC. The implementation of this CBDC is presently being looked at for retail as well as wholesale payments. And I think this shows how the regulator is looking towards the future. It may also be a turning point for digital payments in India, especially that since COVID, many banks are moving towards a more digital presence with tie-ups with fintechs and so on to provide branch services on a digital platform. Although I suppose we're presently quite a long way away from neobanks, we're definitely, I think, headed in that direction in India. So I think on that note, the future of digital lending seems to me to be very exciting and full of possibilities. But for India to realize the full opportunity for all stakeholders, consumers, lenders, and regulators are all going to need to play their part. What better than to cater for users with healthy credit scores and positive borrowing habits, a base of users that are financially aware and conscious about their aspirations and of course their limitations. This will create a win-win situation, not just for themselves, but also for us lenders. Ladies and gentlemen, thank you very much for asking me to make this closing address, and thank you for listening.
Mel, thank you so much for sparing time to address us, and we're sorry for the delay. That brings us to the close of this very exciting Digital Roundtable India. I want to thank all the speakers and experts who joined us today and spared their valuable time to address us. I also want to thank my team. We had Ashrit Verma, Mansi Khandelwal, Parth Oberoi, and Tanvi Kusum. I want to thank you all. It's interesting that both Mansi and Parth are presently asymptomatic COVID positive, but I want to thank them for taking this effort and helping us out. I want to thank all the attendees for being with us today live to see this webinar. We will be uploading this webinar on our YouTube channel, and it's already available on our Facebook page. It's for those who missed it out. And that brings us to the close. Thank you for being here. Stay home, stay safe, and take care, guys.